Hey traders, checking into the stock market today. We were close to seeing the bears taking short-term control this morning, but bulls showed up to defend support yet again, keeping that bear frustration fresh as we hit new highs. I'll show you the time frame and clarity where I'm watching the uptrend in the broader markets, and a place where I'm watching for some rotation, and also a place I'm keeping an eye out bearish. So we'll start with the S&P 500. This is the 4-hour time frame on the futures chart, and this is where I'm finding the clarity. We set that 4-hour higher low Thursday night when we closed week, and it looked like we might be headed for daily consolidation, held EMA 12 support, and then this morning, from futures open last night into this morning, another pullback, another 4-hour higher low, and continuation. This yellow resistance line is the next resistance that we're looking at here on the S&P 500, and it's from the way down. There was a triple top back at the end of April, and so that level is coming into play. And if we're looking at SPY, that is essentially 428 if we're going to round a little bit. And it looks like those levels were hit in extended hours, a little bit higher. So I'm going to stick with the futures chart. Just a little resistance level to be keeping an eye on. But with where we stand right now, because the bulls have followed through the last couple of days, we're going to be looking for daily higher lows. Unless there's some kind of news catalyst, unless there's big time bear volume, and unless all of our sectors are dropping together on big bear volume, we're going to be looking for a daily higher low. Whereas right now, we can pull back 4% and still be in an uptrend. So you need to determine if you are looking bearish for daily consolidation. Are you looking for just the daily pullback, or are you going to try and position for weekly consolidation, knowing that we may just form another daily higher low first? Something like that, I don't know. But in the short term, keeping an eye out for daily consolidation and daily higher lows. So the NASDAQ is very similar as far as the clarity on the 4-hour time frame. Difference being we already broke that resistance level from on the way down in April. You can see we're over that price right now. And again, same thing. We got a lot of space for a daily higher low to form next time we consolidate. 4% plus, even more space for the NASDAQ. So when daily consolidation begins, losing the 4-hour uptrend, I'm going to be watching for SPY and QQQ first hourly oversold conditions, trying to set the daily higher low if this uptrend is going to remain strong. So today, this morning, first thing, we were very close to rolling over and having the bears take control of the day. And it was, we set a 4-hour higher low. We bull broke over the pre-market or the after hours high last night. And then we started to show some weakness. And so it was close to being a confirmed 4-hour bull flag with zero follow through into a loss of the 4-hour uptrend. And the NASDAQ started the morning as a lead bull. So big bull move, almost rolled over, held the low of the day, new high of the day, almost rolled over. And QQQ at that point is giving us a triple bottom and just playing defense. The bulls just defended the low of the day. And we could say if we're not going to break the low of the day, bulls are going to keep their control. And from there, I mean, you can literally feel the bear frustration right here. Just, oh my God, we're V-shaped into a higher high after almost breaking the low of the day. So bulls played defense and kept control. And I will be calling anything above the low of today an hourly higher low on SPY and QQQ. And so the way that I'm approaching each day is trying to grab a bear position for the potential of daily consolidation and then just letting myself stop out if the bulls keep that control. So did a little bit of that with SQQQ again today. Just little small losses as the IRA portfolio keeps going up. And so those little losses are taking away some of that upside movement in the IRA. But I want a position for weekly consolidation, and I'm going to be looking for a position for daily consolidation, but not doing so very aggressively. I will let the bulls stop me out as I have been. So SMH is testing or broke the high of 245.74. So daily uptrend remains intact. We had that big pullback on the NVDA bear news. Very impressive to set that higher low and head right back into continuation with that higher high. And NVDA has not broken bull yet, but we're right there. 192.74. Again, just very significant dip buying from those lows, a very quick 15%. So resistance in play for NVDA, and even if we reject from 192.74, we're going to scout a daily high or low to be the result of next consolidation with a whole bunch of space for it. Healthcare has my focus this week. So doing my weekend homework and making some videos for Chart Guys members, I was keeping an eye on the fact that healthcare has been trading sideways for 2 weeks while the broader market has been running up. XLF has been the star of the show this past week for the bulls. Obviously, the NASDAQ participating as well. So I was looking at this and saying, if we're going to keep grinding up, I'm looking for the healthcare sector to now take a turn and break this sideways range bullish. And we had this little resistance zone here with all these tops. But as soon as you clear that, we're now looking up at 136.94 and then a gap fill at 137.84. And so just watching XLV to take a turn, and another reason I was keeping an eye on it to be a laggard in this sense was because we confirmed this inverse head and shoulders on the weekly for the uptrend, and that was very similar to utilities. Look how utilities responded. Way stronger, but it was the same weekly setup. Inverse head and shoulders, and now the utilities are at all-time highs. So essentially, I was viewing it and saying, if we're going to keep seeing the bulls in control, I'm watching for rotation, and I'm watching for healthcare to now take a turn. Maybe financial sector pulls back for daily consolidation while that happens, and today that was not the case, but watching for healthcare, how long can the healthcare bulls now stand out after sideways for 2 weeks? And again, just comparing here to the utilities, very similar, but obviously the lack of follow-through on that bull break. We traded sideways for a couple weeks while XLU kept shooting on up. So I did grab an XLV position today, and I went a little bit larger than I normally do on a swing position because it's less volatile, and I was just trading XLV, the actual ETF, rather than anything leveraged. Cure is the leveraged bull, but it has gaps on the 5-minute time frame, and I won't trade anything that has gaps on the 5-minute. That tells me it's not liquid enough for me. But the pullback here, I made an entry on the morning, and this pullback said, uh-oh, that's a big upper wick on the daily time frame, and I don't like the look of that. So I exited half break even just to size down. And so swing position I have now from an entry in the 133.80 range is up a bit. And I'll see how long the bulls convince me to hold that. I'm keeping an eye out for that gap fill if the broader market bulls can keep grinding higher. And it's another thing, same mindset for me with Amazon. Amazon has not been participating for the broader market bulls over the last 5 or 6 trading days. Look at what QQQ has been doing without the help of Amazon. So I look at that and say, well, Apple's been leading the way as our captain lead bull looking back towards all-time highs and watching to see, does Amazon get a turn? Does Amazon break this sideways range bull? I was watching for it today. It did not happen today. Does it happen tomorrow? Where that's fuel. You look at QQQ. How can we keep going higher? Who's buying? Well, if Amazon breaks this sideways range bull and sees another leg up, I think it's the second largest holding in QQQ, that's going to help for the bulls to keep their control. So in my mindset, we are in a laggard bull environment where we are buying hourly higher lows on the strongest names. We're buying daily higher lows on the strongest names, and we're watching the weaker names for laggard action. And so XLV was what I consider over the last 2 weeks a laggard, and Amazon watching to see if it's going to be a 1-week laggard. And cannabis names put out the video over the weekend saying as long as the broader market keeps grinding higher, keep an eye out for the laggard bull break. And CGC inside bar bull break up 16% today, and just a laggard move, not participating much at all in the, 6-8 week bounce for the broader market and trying to play catch up. And if you look at the monthly time frame, the monthly bounce is now underway. The biotech growth names started their monthly bounce 3 months ago. Psychedelics started their monthly bounce a month ago, and just everybody's getting their laggard turn as long as the broader market bulls keep their control. So CGC I'll be watching for an hourly higher low. TLRY in this sector was a lot weaker today. And so I was shorting TLRY with these top fishing plays. We had a double top at the high of the day. We broke resistance by $1, or by a penny. These pullbacks, though, give plenty of opportunity for solid profit. And why I choose bearish is because if I miss the morning bull move while live streaming, if I've got a clear level to play off of, that low risk, decent reward scenario is what I look for. So I'm going to be scouting CGC for an hourly higher low, and we'll see if TLRY gets its turn over 443 resistance. But Canadian cannabis getting some life as laggard growth bulls. Pretty much the weakest sector left in the market that has not seen a run is trying to participate a bit. Financial sector keeping strong, held the low of yesterday after starting the morning weaker, broke the high of Friday, I should say, and stair-step pattern, higher low every day now 6 days in a row. Resistance is 35.65 and then 35.90. And bulls just continuing. And again, tons of space for a daily higher low to be the result of the next pullback. IWM has been a lead bull. It's continuing. Close at the high of the day, 2 days in a row. 204.26 resistance from here. Tons of space for the daily higher low. Biotech bulls, again, watching for it to potentially take a turn now. After being sideways, trading sideways for the last 6 days, closing right up on our double top of resistance, 95.18 is now a triple top. And bulls are going to try and break that tomorrow. And healthcare strength would definitely help biotech bulls see another leg up. And it's just a tightening 4-hour range on the verge of breaking bull. And so you look at this and I myself, what am I buying up here? What am I going to be comfortable going long on? It's just looking for shorter term opportunities with low risk. And so today I traded this XBI 15-minute bull flag. And the reason being, I remembered on Friday, the biotech sector had some relative weakness in the morning. And actually, it wasn't Friday, it was Wednesday. I'm getting my days mixed up. Wednesday, relative weakness all morning, trading sideways. And then bulls took over from midday forward. And it was essentially the broader market grinding higher, higher, higher. XBI, clear bear correlation. But the broader market never pulled back. So the biotech bulls said, all right, well, we're going up. And so this was the same thing today. 15-minute tightening range. Broader market and major sectors are grinding higher. It breaks bull and then saw continuation into the end of the day. So that was one place where I was able to make some gains as a bull today, aside from XLV. But have to just use short-term time frames and keep your risk small. And if you stop out and it's a small loss, no biggie. But looking for hourly higher lows, that was looking for a 15-minute higher low. And just not fighting the bulls hard, fighting them a little bit. Just giving myself some exposure in case we roll over. But once the bulls proved to me, nope, not this morning, which they've done morning after morning after morning, then I stopped fighting them from there. CCJ is one place where I'm keeping an eye out for the bears. So the weekly has pretty much a year-long equilibrium here. And I'm scouting this weekly lower high compared to 28.28. And it's technically set as we broke the low of last week already this morning. But we went straight into an hourly oversold bounce. So I did short a little bit first thing this morning. And then I shorted hourly consolidation with a day trade size position, which was a good bit larger. And so scaled out of that day trade short real quick to get my break even of my swing position up to about 24.90s. And it's just a name that is positioned well for bears if the broader market consolidates. If it doesn't, then bulls are going to head right back up to the highs. But it's a potential head and shoulders shape here now as well. And I will exit. Not sure where my stop will be. My initial stop was at 25.51 when I made my first entry, but I was then able to get my average much better. So I might be going off of 26.13, that daily lower high. Depends on what the broader market does. I'll ditch this fairly quickly if the bulls start to prove their follow through. The VIX, keep it simple, daily lower highs. As long as the VIX keeps setting daily lower highs, nothing changes. So So right now, anything under 22.34 is just a daily lower high on this current bounce. The dollar is seeing strength. And again, I look at the broader market and say bulls are extremely pleased that they are not being negatively impacted by a very strong 2-day dollar bounce. The dollar is shaping up the weekly higher low off EMA 12. Bigger picture, the dollar bulls are keeping strength as long as the weekly uptrend remains intact. The dollar strength has had a notable negative impact on metal bulls, but not the broader market. So metals, we went from a really strong Friday close into a very weak day today. Just bull flags failing. And we're on the verge of weekly consolidation now in gold, testing the low of last week. And if it breaks, we'll be scouting a weekly higher low, knowing that the bulls must confirm the weekly trend change if this move is going to have follow through. Silver did the same thing. Bull flag, strong close at the highs, and then just dumped today on dollar strength. Silver is a 4-hour megaphone. Resistance breaks, straight into support break, straight into resistance break, straight into support break. On the verge of weekly consolidation for metals. And miners are even weaker. GDX already broke the low of last week. Some dip buying on the gap down open, but keeping an eye on the dollar for more notably its impact on the metals. And seeing if gold and silver start weekly consolidation this week. Oil is still sticking within the falling wedge. We are testing support. Bear break of 87.01, currently no follow through. We'll see if that remains the case. I'm not going to long down here. This is just a pattern that I'm watching where if I can get a comfortable level to bottom fish off of, then I will look to potentially go long. And again, it's the bulls battling to try and hold monthly EMA 12 support for a higher low. But I need a green day tomorrow if I'm going to continue keeping an eye on the bulls. Natural gas looks real strong. Daily bull flag attempt. So we got a weekly bull flag attempt and a daily bull flag attempt. 907 and 957, two key resistance levels, and the burden is certainly on bears to prove to us that we're not heading back to that double top. But so far this bounce from that 4-hour falling wedge we were watching last week, bulls are looking pretty good on it. So overall, I'm bullish as long as we're in daily uptrends. I'm anticipating daily higher lows in lots of places. The next time we see daily consolidation, I'm watching the rotation game that is going on, which is ideal for the bulls. Again, if money is leaving the market, everything drops together. So we'll be watching for that. A lot of people posting, the 2008 charts and the similarities, and there are a lot of similarities. There are a lot of similarities right now with the size of this bounce in the broader market and the dump that we then had in 2008. And just looking at the S&P 500 real quick, not quite as significant a retracement, I don't believe, but from the all-time high, we did get over 50% retracement. It's very similar. It's right where we are right now. And Apple, same thing. Apple's V-shaped bounce is extremely impressive all the way back up, but it did that in 2008. So what's the difference? Look at that V-shaped bounce, fail the high, and then roll over. The difference between all these comparisons people are making, and again, technically speaking, you can make comparisons to 2008, absolutely. The biggest difference that is being missed by people making these comparisons is the psychology aspect. 2008 was a black swan event that the vast majority of people did not see coming. And right now you have the majority of retail on social media looking to predict a black swan in advance. And I'm sorry, I love you all, but I don't have the confidence that you can all nail a black swan in advance. I mean, that defeats the purpose of what a black swan is, but that's the difference. Anticipated versus out of thin air. We'll see. One day at a time. As always, I will shift my perspective if bears convince me to. 4-hour futures uptrend, daily uptrend. Do good things.